All right, welcome back, everyone. Today, we're going to be taking a deep dive into Nutrien's performance in fiscal year 2023.
Looking forward to it.
Yeah, and for this one, we're going to be focusing on their FY 2023 annual report, really digging into those business segments, getting into the nitty-gritty of their financials,
Okay.
and, exploring how they're creating value for shareholders. And of course, we'll wrap it up by taking a look at their future outlook.
It sounds good.
So by the end, the goal is to equip you with a comprehensive understanding of where Nutrien stands today and where they might be headed.
All right. I'm ready when you are.
Okay, so the report kicks off with a really concise overview of Nutrien, right? Like who they are. And they basically position themselves as like this major player in the global food system, right?
Mm-hmm.
They really emphasize their global network of production facilities, distribution channels, and all those retail locations.
Yeah, it makes sense.
I mean, this interconnectedness across like the entire value chain from production to retail
Right.
seems pretty crucial for them.
Oh, absolutely. It's like, they've got this carefully orchestrated system where they produce the crop inputs, distribute them,
Yeah.
and then get them straight into the hands of growers. I think that's got to give them a real edge, especially when things get a bit shaky in the market.
That's a really good point. And it's definitely something to keep in mind, like you said, as we go deeper into this report.
Definitely.
Okay, so let's shift gears a bit and get into the heart of their operations. The four main business segments, right?
Okay.
You got retail, potash, nitrogen, and phosphate. Each one plays like this distinct role in their overall strategy. So understanding how each one performed is kind of key.
Agreed. It's like looking at the different sections of an orchestra. Each one's got to be in tune for the whole thing to work.
I love that analogy.
Right.
Yeah. Okay, so let's kick things off with retail.
Okay.
They boast over 2,000 selling locations globally, which makes them like a dominant force in getting those crop inputs directly to the growers, right?
What really stood out to me in the report was their emphasis on like digital tools and these really attractive credit options they offer.
Yeah, that's smart, especially these days when growers are becoming, more tech savvy
Totally.
and need more financial flexibility.
Absolutely.
It's not just about selling fertilizer anymore,
Yeah.
right? It's about building a full-fledged partnership with the growers.
It's like they're becoming agricultural consultants almost.
Exactly.
However, the report does mention, some headwinds they faced in retail in 2023. Lower gross margins are something they point to,
Yeah.
which they attribute to, market adjustments we talked about earlier,
Yep.
and also the challenge of high-cost inventory.
Yeah, that's the flip side of that integrated model.
Right.
When input costs rise, it affects the whole chain. So it'll be interesting to see how they manage those costs going forward.
Absolutely. Maintaining those margins is going to be key for them.
For sure.
Now, let's move on to potash.
Nutrien is like the world's largest potash producer, right?
Pretty impressive.
They control a significant portion of global reserves.
Hmm.
And the report highlights their like massive production capacity in Canada specifically.
Mm-hmm.
And also points to this like strong global demand they experienced in the second half of 2023.
Yeah, that strong demand has got to be a good sign, especially given all the stuff happening globally that impacted supply chains last year.
For sure.
But, we can't forget those potash prices are pretty sensitive to global events and trade policies.
Right.
So Nutrien's going to have to stay agile to keep up with those changes.
It's a good reminder that like even the biggest players in the game aren't immune to those global market forces.
Yeah.
All right, let's move on to nitrogen.
Okay.
They're a top 3 global producer
Yeah.
with this network of facilities across North America. And the report really emphasizes their access to low-cost natural gas, which seems like a pretty major advantage.
Oh, for sure. Especially when it comes to keeping costs down and staying competitive.
Yeah, totally.
It's also interesting that they're focusing on low carbon nitrogen production.
Yeah.
It aligns with that broader sustainability push we're seeing across many industries.
Yeah,
And could give them a leg up as environmental regulations get, even tougher.
totally. It seems like sustainability is like woven into their growth strategy.
Yeah,
And it's definitely something we're going to want to come back to later on.
definitely.
Okay, lastly, let's look at their phosphate segment.
Okay.
The report emphasizes their focus on North America, where they prioritize having like a flexible product mix and also minimizing their environmental impact.
That makes a lot of sense. Focusing on North America where they already have a good foothold
Yeah,
and that flexible product mix that lets them tailor products to specific soil and crop needs Might even lead to, a price premium.
It's about being adaptable and offering those tailored
Right,
solutions.
exactly. Not just a one-size-fits-all approach.
Totally. It's a really strategic move, especially as growers face, more complex challenges these days.
For sure.
All right, so now that we've laid the groundwork with these business segments, let's jump into the numbers
Okay.
and see how all this translates into their actual financial performance.
I'm ready to dig into those financials. Let's see how these pieces all fit together. Okay, so let's open up the books and see what Nutrien's financial performance tells us.
Okay.
We'll start with their income statement, which gives us a good look at their revenue and expenses, ultimately how profitable they are.
Perfect. So what, jumped out at you when you first looked at this? Anything surprising?
The first thing I noticed was a pretty significant drop in sales compared to 2022.
Oh, really?
Yeah. They reported 29.1 billion in 2023, which is down from 37.9 billion the year before.
Okay, so that is a pretty big difference. The report mentions lower selling prices across most of their segments, so I'm guessing that's the main reason for that decline, right?
Yeah, exactly. And those lower selling prices kind of trickled down and impacted their gross margin too.
Okay.
It dropped from 15.4 billion in 2022 to 8.5 billion in 2023.
So even though they sold higher volumes of some products, the lower prices really ate into their profitability.
Yeah, that's right.
Does the income statement give us any clues about how they're dealing with this, like pressure on their margins?
Well, one thing that's worth noting is that their operating expenses actually decreased a little bit in 2023.
Okay.
So it seems like they're taking steps to, control costs, be more efficient, which is really important when prices are all over the place.
Yeah, no, that's a good sign. It shows they're not just sitting back. They're actively trying to adjust to the market.
Exactly.
What about their bottom line? How did those lower sales and margins ultimately affect their net earnings?
Well, even with those challenges, they still ended up with a net profit of $1.3 billion,
Okay.
which is a significant drop from the $7.7 billion they reported in 2022.
Right.
But, we got to remember that 2022 was kind of a unique year. Their earnings were unusually high.
Right. 2022 was like an outlier for a lot of companies in the agriculture industry.
Yeah, exactly.
So a $1.3 billion profit, considering everything going on, it's not too bad.
Yeah, I'd agree with that.
All right, let's move on to the balance sheet. This gives us a snapshot of their assets, liabilities, and their overall financial health.
It's a good overview of their financial strength. So as of December 31st, 2023, they reported 52.7 billion in assets and 38.9 billion in liabilities.
Okay.
So that leaves them with a solid equity position of 13.8 billion.
Okay, so more assets than liabilities is always a good sign.
Hmm.
What are some of the key assets that stand out to you on their balance sheet?
Their property, plant, and equipment is their most significant asset.
Okay.
It's valued at $22.5 billion.
Wow.
And this shows just how much they've invested in all those production facilities, mines, and the retail locations we were talking about earlier.
It's like a physical representation of, how big they are in this industry.
Yeah.
It's also worth noting that they have a lot of goodwill on their balance sheet, right?
Yes, they have a substantial amount of goodwill, 12.1 billion to be exact.
Okay, so can you explain what that means, for people who might not be familiar with that term?
Sure. Goodwill basically represents the extra amount they paid when they acquired other businesses above the value of those businesses' actual, physical assets.
Okay.
It reflects what they believe those businesses are really worth, their potential.
So it's like an intangible asset, but still important to consider.
Exactly.
The report mentions that they actually had to take an impairment charge on some of their goodwill in 2023, right?
Yeah, they had to take a $465 million non-cash impairment charge, mostly related to their retail business in South America.
Okay.
So that kind of suggests that those businesses they bought might not be worth as much as they thought, maybe because of the market or the economy down there.
It's a good reminder that goodwill isn't, set in stone. It can change based on all sorts of things.
Exactly. It's always being reevaluated.
Okay. Let's look at the other side of balance sheet, the liabilities. What are their main obligations?
Their biggest liabilities are long-term debt, which totals 8.9 billion, and lease liabilities of 1 billion.
Okay.
These represent their obligations for all the money they've borrowed and the assets they lease.
Yeah, debt is pretty common for companies to, finance their operations. How would you assess their debt level? Are they taking on too much risk?
I think the managing it pretty well, actually. Their debt-to-equity ratio is 0.64, which is considered quite healthy.
Okay.
This means they have a good balance between debt and equity, so they're not overly reliant on borrowed money.
Okay, that's good to hear. So we've looked at their profitability on the income statement and their overall financial health on the balance sheet. Now let's move on to the cash flow statement.
Okay.
This one tracks the movement of cash both in and out of the business.
Right.
So it really gives us a good picture of their liquidity.
It's like their financial heartbeat. You can see how the money's flowing.
Okay, I like that. So in 2023, they generated $5.1 billion in cash from operations.
Yeah, that's a pretty solid inflow of cash.
Yeah. Where did most of this cash flow come from?
Mainly from their core fertilizer operations.
Okay, that's good news. So cash flow is all about how a company generates and uses its cash. Where did they allocate these funds?
Well, they put $2.7 billion right back into the business, through capital expenditures, mostly to maintain and improve their existing assets.
Okay, so they're reinvesting a good amount to make sure those facilities run smoothly.
Yeah.
And maybe even for future expansion.
Exactly.
What about returning some of that cash to shareholders? Did they keep up with dividends and share buybacks in 2023?
Oh, yeah, absolutely. They returned a total of $2.1 billion to shareholders, showing that they're committed to, sharing profits and increasing shareholder value.
That's a pretty significant amount, especially given that their profits were down this year. Before we move on, you mentioned earlier a metric that you like to look at, free cash flow. Can you explain why that's so important? Like, what does it actually tell us about Nutrien?
Sure. Free cash flow is basically the cash that's left over after a company pays for all its essential expenses, like capital expenditures.
Yeah.
It's the money they have available to do things like invest in growth, pay down debt, issue dividends, or even buy back their own shares.
So it's a good indicator of their financial flexibility and their ability to reward those shareholders.
Exactly.
What does Nutrien's free cash flow look like for 2023?
They generated $2.4 billion in free cash flow.
Okay.
Which gives them a lot of options, puts them in a good spot to deal with any challenges or opportunities that come up.
Yeah, that flexibility is key. All right, we've covered a lot here. We've gone through the income statement, the balance sheet, their cash flow. I think it's time to zoom in a bit, focus on those individual business segments, see how each one contributed to these overall results.
Yeah, I agree. Looking at those segments will give us a better understanding of what's driving their success and where they might be facing some headwinds.
All right, so we've, gone through those financials and kind of analyzed how Nutrien is doing as a whole.
Right.
But let's get a little more granular,
Okay.
Look at the performance of each of those individual business segments,
Yeah, get a closer look.
See what their strengths and weaknesses are, how each piece of the puzzle contributes to the big picture.
I like it. Let's do it.
Okay. Let's start with their retail segment, which, if you remember, is their biggest revenue generator.
Yate.
And it's that, crucial link to growers on the ground.
Yeah, a direct connection.
Exactly. So what's the story with retail? Did they manage to, weather the storm in 2023, with all those market challenges we talked about?
Well, they brought in $19.6 billion in sales for 2023.
Okay.
Down a bit from $21.4 billion in 2022.
Okay, so a bit of a decrease, but nothing too drastic.
Right.
What factors were kind of at play here?
Pretty much the same stuff we saw affecting their overall financials.
Okay.
Lower selling prices for, their main products, things like crop nutrients, crop protection, seed.
Right.
That was the main reason for the sales decline.
Okay.
But on the flip side, they did see higher sales volumes, especially for crop nutrients and potash.
It's that push and pull between price and volume, right?
Yeah, exactly. They're selling more, but getting less for it.
How did that affect their profitability, specifically in the retail segment?
Their adjusted EBITDA margin took a hit. It went from 11% in 2022 down to 7% in 2023.
Okay.
So yeah, those lower prices definitely squeezed their margins, even with the higher sales volume.
Makes sense. It sounds like a tough market to navigate. But, the report did outline several initiatives they're taking to, boost that profitability.
Yeah.
They're focused on, expanding their range of differentiated products, which could, potentially command those higher margins.
Right.
And they're also investing in, digital tools to kind of enhance that customer experience.
Yeah.
And hopefully drive some efficiencies.
Those are some smart moves. It's about going beyond just being a supplier. becoming a real partner to the grower,
Yeah.
offering those customized solutions, adding that extra value.
It's about building that resilience,
Yeah,
adapting to like what growers really need.
exactly.
Okay, let's shift gears to potash, which is, a core segment for Nutrien.
Mm,
They're the global leader,
mm,
right?
they are.
And the report highlighted like that really strong demand in the second half of 2023.
Yeah.
How did that translate into their financials?
Well, potash had a pretty good year.
Okay.
Their sales hit $7.3 billion, up from $6 billion in 2022. So that growth was fueled by higher sales volume, particularly in North America, and that strong global demand we talked about.
So they're really taking advantage of that top spot.
They are.
Did those higher sales, turn into better profits?
Oh, yeah, for sure. Their gross margin for potash jumped from $3.2 billion in 2022 to $4.4 billion in 2023.
Okay.
So higher sales volume and, a better pricing environment, that all helped.
So it seems like they're handling the potash market really well. What are their main goals for this segment going forward?
The report mentions that they're focused on getting the most out of their existing production facilities.
Okay.
They're also looking for growth opportunities, but they decided to pause their expansion plans.
Okay.
That one that was going to take them to 18 million tons of annual production.
Right.
Probably a smart move given the current market conditions.
Yeah. Makes sense to be flexible.
Absolutely. Gotta adapt.
Okay, now let's talk nitrogen.
Okay.
This segment, according to the report, saw a pretty significant drop in sales.
It did.
What were the main reasons behind that?
Nitrogen faced a few challenges. Sales fell to $3.8 billion, down from $6.6 billion in 2022.
Okay.
Mainly because of lower selling prices for things like ammonia and urea.
Okay.
And then you had increased global supply on top of that, which made it even tougher.
Yeah, that's a pretty steep drop. Did that affect their profitability?
Yeah, it did. Their gross margin for nitrogen went from $3.2 billion in 2022 down to $1.4 billion in 2023.
Wow.
So those lower selling prices really hit them hard, even though they did sell more some products.
Sounds like a classic case of supply and demand issues.
Yeah, pretty much.
But the report did highlight some of the things they're doing to try and, improve their position. They're focusing on expanding that low carbon nitrogen production, which, as demand for sustainable product grows, that could be a really good move.
Yeah, definitely.
And they're also looking at, expanding their existing facilities, increasing capacity, getting those operating rates up.
Smart moves. Investing in both efficiency and sustainability, that's key in this market.
Yeah, and we can't forget, they've got that access to low-cost natural gas.
Right, exactly.
Which is a big advantage when it comes to, production costs.
Huge advantage.
Okay, let's finish up with their phosphate segment.
Okay.
Their smallest, revenue-wise. What can you tell us about how they did in this area?
Phosphate was a bit of a mixed bag.
Okay.
Sales were up a little, $1.7 billion compared to $1.6 billion in 2022.
Okay.
That was mostly driven by higher demand for phosphate fertilizers, especially in North America.
Okay.
But lower production earlier in the year, that kind of messed with their industrial and feed sales.
So some good, some not so good. How about their profitability in phosphate?
The gross margin actually declined quite a bit. Went from $511 million in 2022 down to $243 million in 2023.
Wow. Okay.
Primarily because of lower selling prices and, of course, those higher input costs we've been talking about.
It seems like that's a common theme, right?
Yeah.
Those rising input costs, volatile selling prices, really putting pressure on profitability across several segments.
Yeah, definitely.
What are they prioritizing in phosphate moving forward?
The report emphasizes operational efficiency,
Yeah.
which makes sense, to try and combat those cost pressures.
Yeah.
They're also really focused on safety and sustainability improvements.
Okay.
And they're going to keep using that product mix flexibility to respond to whatever the market throws at them.
And they're continuing with that land reclamation, which is good to see.
Yeah.
So they're serious about being, environmentally responsible.
Absolutely.
Okay, so we've covered a lot of ground today.
We have.
From Nutrien's overall strategy down to, each individual segment.
Yeah.
What are your big takeaways from, this deep dive into their annual report?
Well, it's clear that Nutrien is a major player in this industry. They've got a diverse business model, and their financials are solid. 2023 definitely had its challenges, lower selling prices, that market volatility.
Right.
But they're actively trying to deal with those headwinds, with strategic initiatives, changes to their operations.
Right.
They're focused on efficiency, sustainability, and innovation. which I think puts them in a good position for the future.
Totally. It seems like they're not just reacting to the market, they're trying to shape it.
Exactly.
And they're committed to their shareholders, too,
Hmm.
with those dividends and share buybacks.
Yeah, for sure. They're not afraid to invest in their business either,
Hmm.
thinking long term.
Absolutely. But before we wrap up, here's a final thought for everyone listening.
Okay.
Given all the big changes happening in agriculture,
Yeah.
climate change, the growing population, changing consumer preferences, what role can a company like Nutrien play in all of this?
That's a good question.
How can they help create a more sustainable food future?
Definitely something to think about.
I encourage everyone to keep exploring this question and keep researching this industry. It's complex, it's vital, and it affects us all. Until next time.